I think that's a good point, is like most people that are depressed or down or out are really knowing that they should be doing something more than they should be. And I feel like that's where a lot of that self-doubt and depression and feeling low comes from, because you know in your heart you shouldn't be eating that food or be doing that or going to the gym, and you're not doing it. And then you just kind of snowball effects to the point where every morning you wake up and you haven't got on that bike again, and it's just like you're beating yourself up. And I feel like, especially for me, like the times where things are going great, it's usually everything else is going great and you're doing what you should be doing.
Hello and welcome to another episode of Ways to Wealth. Today I'm joined by Sam. Sam, why don't you give us the too long didn't read about who you are and what you do and what got you here?
Sounds good. Sam Rains. My company's called The Web Guys. Founded it in 2022, in 2013. Yeah, basically founded the company off the back of working at another web company. And as most people starting businesses probably find, I thought I could do it better.
Right.
Thought I could provide more value in the market. Obviously, then broke away from the company I was working, kind of pinched one of their developers at the time, and we started The Web Guys. So, yeah, that's a bit about us. Obviously, we specialize in digital marketing services, building websites, mainly here in Australia, and some overseas as well, and focusing on performance-based sites, so building sites for businesses and with a real focus on SEO and optimizing them and having campaigns drive traffic into the sites, as well as branding work and a bunch of other services we offer off the back of that. Yeah.
Oh, yeah, cool, nice. So you said 2013 and 2022, so it started in 2022.
2013 is when we started.
Yeah, right.
Sorry, I don't know where that 2022 came from.
Yeah, I was just...
That was a couple of years ago.
Yeah, I was like, that's pretty quick, because I know obviously what you were saying in the other room about the growth and the size. Yeah. I was like, oh, that's quite a lot of growth in just... Yeah. No, so 2013 you started.
Yep. 2013 started. Founded it 2013. I was 22. Probably that's where it came from. I was 22 years old.
That makes sense.
Yeah.
Okay. It all makes sense now. Unraveling it.
Yeah.
Cool. So you were 2022, and how long were you working at the previous agency for?
I was working there for about a year. So
okay.
I'll give you a bit of a rundown.
Yeah.
So probably left school quite early at like 14. Wanted to become a DJ. I think that was my first entrepreneurial journey into wanting to do something for myself.
Yeah.
So basically started DJing, was quite young, started getting a few club nights here and there, and would travel around a bit and would find it hard to get paid, because obviously being so young at like 14, 15,
right,
they just saw me as like a newcomer.
Yeah.
So we'd always have to, after a gig, kind of probably learn a bit of debt collecting skills there, to be honest.
Yeah.
But then after, a bunch of years of doing that, realized, look, there's not that much money in it, to be honest, in New Zealand, unless you're actually producing and you're overseas. So kind of started to get a lot of building jobs and trade jobs.
Okay.
And probably had 100 under my belt. Not going to lie, I had a lot of different jobs, would last 3 months and go to start something else, and was trying to find my feet. My sister was like, why don't you get into sales? Because obviously you can sell yourself and getting all these jobs, but trades is probably not the one for you. So kind of from there, on the back of that, went and found a company that was called Gopher. Was there for about 6 to 8 months, I would say. Was a lot of sales skills, very boiler room, kind of Wolf of Wall Street type style, where you're on the phones, but you've got to wear a suit.
Right.
And it was quite intense. You had a sales manager over the top of you being like, make you 100 calls.
Right.
That's where I probably learned the raw sales skills, became quite good at it. And then I was like, this isn't really for me. The kind of what they're selling isn't the greatest of products.
Okay.
Then and went and worked for the web company for about a year. And
you were selling there. That was your job.
Yeah. It was one of their top sales guys there. After about a year, was like, let's go start the Web Guys. So that's kind of how the name started as well, because it was like Sam, I was calling from the web company, which is still around. And then, I was like, well, what's another name when I cold call that's pretty similar? So the Web Guys just
that makes sense. That's good for calling as well. Yeah, nice. Okay, cool. So like you were entrepreneurial. You basically wanted to be independent early. You realized that. You left school early.
Yeah.
And then just started hustling.
Yeah,
basically.
Pretty much. Yeah.
And then you found that there was a strong demand and a good product in the web development space when you went and worked there, and you're like, okay, sweet, I can do this and I can get more upside, hopefully.
Yeah, pretty much. I definitely felt like, the team that was working there, I guess could have been better. So I thought, like, let's just.
And do you think it was from a sales perspective or a delivery perspective?
I think it was from a delivery perspective. I think the sales was really quite straightforward, because it was new. Google Ads was new. Businesses are starting to kind of see that shift from like the yellow pages, that hard copy book, to then more of an online presence. So rather than, at GoFit was more selling a directory listing on their website, which I realized there's not much traffic happening. So it'd actually be better to go and sell people their own website and their own digital marketing and drive the leads through their email themselves, rather than kind of rely on these third parties. And there's still a lot of third party companies out there doing well and providing value. But this one in particular, I was thinking, well, I would rather people have their own website,
right?
And was already selling that at the Webco, so it was kind of a follow through to selling that, and started off selling like, I call them $1,500 naughties. They were like $1,500, $2,000 themed websites that didn't really have performance.
Yeah.
It was probably only 3 years in where I was like, wow, learned about SEO and learning about driving traffic through ads.
Yeah.
That's kind of started to create the recurring revenue in the business where I could start employing people.
Yeah.
So that's probably the first step, was starting the business, taking that leap. Then the second leap was probably 3 years in, where we started to sell more digital marketing services, so more retainers.
Yeah.
And then that would warrant hiring people, because off the back of retainers, you could justify
certainty.
Yeah, you could justify hiring people with some certainty. Exactly. Selling one-off websites is like going to war every day. There's a lot of competitors that still sell websites, and I'm like, how do you survive?
Okay, but you really don't sell websites now.
Well, we do. Sorry. About 50% of our business is made up of still selling, custom-built design, UX, UI, taking clients through that process of designing a bespoke website,
right?
As well as the performance side after it's built. Then we kind of follow through with digital marketing services. Yeah. So I'd say it's probably 50-50. 50% of still building some pretty awesome stuff, and then the other 50% is really driving the marketing once it's built. Yeah.
And is it a bit of a gateway drug, the first piece?
Yeah.
Buying the site.
Yeah.
Cool.
Yeah, we hold a lot of the top page rankings in New Zealand for like website design NZ, website design Auckland. We're pretty much number one organically. So we live and breathe what we sell. People see us on Google, they'll type in website design company or website development, see us at the top, click through to the site, and pretty much say, well, I want what you've got for their own business. So we kind of live and breathe it, I would say. Yeah.
Yeah, that makes sense.
Yeah.
Oh, that's cool. So 2013 you started, 2016 you started hiring people.
Yeah.
And having to actually, would you say the first 3 years was about survival, and then you had some stability and you had some certainty through retainers and decent cash flow?
Yeah, 100%.
And then since then, like, what's been the plan? Because I guess that you're in the next phase of the journey now, where you have a lot of team members. You are obviously managing the risk associated with that, managing the work coming in. But then often there's offshoots to how do you actually build your wealth from there.
Yeah.
As a business owner.
Yeah.
And have you had any thoughts about that? Like some product companies and agencies like yours may start building their own like products.
Correct.
Like, so what's your strategy been, and have you thought much about it?
Yeah. So there's a few things to touch on there. I guess, you're right. The first 3 years was really hard grind, outsourcing to people that didn't really know what they're doing. They're looking back.
Yeah.
And then, hiring I think the first person I hired after the 3 years of just doing it alone. Well, I had a business partner, but he got kind of pinched by another company at the time after the first year. So then there was a couple of years of me just outsourcing it and eating shit, I call it.
Yeah.
And then, hiring, I think I was the first salesperson I hired.
Yeah.
And then it was like a designer and then a developer. And then as we got more sales, we just kind of kept building on the team.
Yeah.
And then my kind of always in my back of my mind, I've always had a thing for property. So I've bought a couple of investment properties.
Okay.
Okay.
Yeah.
And then just recently, 6 months ago, TWG Commercial Limited bought the office that we're in. So kind of leveraged some of the office space we were already renting into buying our own. Right. So now we own the commercial space we're in Par now, which is great, a great move. Bit tight, but with all the fit outs and all the costs that come in with that, it was a bit tight last year with the market kind of crashing as well. But we made it through that now, and things are looking really good. Probably the riskiest thing recently I've done, but also the best thing, I would say. Okay. And then now we're moving into some AI products. So we've got an AI calling product, which is under the Web Guys brand. We're starting to on-sell to clients, which is basically like an inbound calling. So rather than having a receptionist, this can kind of handle inbound calls and direct them to other people. Yeah, direct them to other people, lock in meetings through calendar. And we're working on another product as well, which is kind of built in to the website where it's like a FaceTime product where people can basically click through the website rather than having to go to the contact form. They can just tap it on the screen and they'll get put through to a real person. Oh yeah, you should look at Talk. They've got a similar product like that. Yeah. So you could maybe get inspiration from them. Yeah, definitely. I think I've heard of them, and I think there's a few people doing the products that we're doing. It's just going to be for sure. Market share, it's always totally. Who can sell it the best? Always is. And like for them, I didn't like that they only had their UI for allowing the engagement to start. Like I would rather have a dedicated page that I could, create my own button that then hits the endpoint and pushes you into the call. Yeah. Rather than being forced into their one widget that then has a tiny little button that you might not see. Yeah, true. Right? You want a dedicated page potentially when you're like, talk to someone now. Yeah, for sure. Like that kind of frustrated me with it. And then they've gone down this pathway. We actually are decon them now. We've moved fully into go high level. Yeah, okay. Just because of the freedom that you get and the breadth of functionality. And obviously we're technologists. Our bread and butter. So go high level is what you use? Yeah. Yeah. For everything now. Yeah. And then we've got other portfolio companies and we're starting to have them integrate it in as well. Yeah, I was using Go High Level for a bit. I just found, it's interesting you say Go High Level. I was looking into it quite a bit. It was just like there's a lot of. It's just like it's hard when you've already got like 600 clients hosted and they have that hosting package thing. And I was looking into it because my mate, I think he was one of the early adopters. It was like an unlimited free hosted sites, and that was like real value add comparing to what we're spending. Yeah, I mean, there's an agency tier for them which we use because we have portfolio companies. Yeah. So then we can actually kind of subsidize the cost of their CRM by putting them into our agency. Yeah. Which is good for them and good for us. Yeah. But I mean, what I found is like the breadth of functionality is wide and you get a lot. And we decon probably for $100 that we pay per tenant. It's $500 for unlimited. Yeah. But let's call it 100 if you kind of prorata it across your different portfolio. We decon probably $450 worth of subscriptions that we're using that we managed to get rid of because we're now using them, which they have a large, but then there's gotchas with like, the functionality is 80% of what the one that you pay is. So, there's kind of trade-offs, but I mean, the fact that it's open source, the fact that you can actually do a lot of build on your own. So if you've got a lot of technical people behind you, you can do a lot. And then, we've really liked it. So it's one of those things. And it's growing, right? Like you obviously can speak to the developers there and say, we should add this in. And with AI, they're kind of adding in more features and benefits in terms of what it's capable of. So that's always a... And that was really just through, the person we brought on into the team already used it. Yeah, wicked. And then as someone that likes automating things and building systems, I was like, there's a lot we could do here. And we were basically lacking sales structure because we'd spent years building technology, and then it was like, okay, well, how do we actually manage this selling, et cetera, et cetera. And then that was the next part of the business, which we've spent the kind of between the start of the year and now, that's what we've been quite focused on, as well as releasing a lot of product, a lot of functionality. So that's your all encompassing pretty much system for CRM, sales. Yeah. Using every AML, widget of it, like the calendar. Everything. Oh, interesting. We use everything. Yeah. I mean, including
payments, it's synced with our
Stripe.
native payments. Yeah.
Yep.
But like, yeah, so Stripe, so our native platform that we've built from the ground up is built on the same membership system. So we can sell someone through CRM and do the payment and give them the feature flags on our product, or we can sell them through the platform and it goes through to the CRM.
And what are you charging the clients, if you don't mind me asking?
Which clients? Our end clients.
Yeah.
So the platform's free to use. You can just be on a transactional basis, and we're like 80% cheaper than traditional brokers or like managed funds.
Yep.
Or you can pay our membership fee, and our membership is $1,200 a year annual, and you get $1 million of free transactions. You get a 70% discount on foreign exchange. You get up to 3.9 savings rate on a basically sweep account, which is basically an on-call kind of savings account. And you get unlimited sessions with financial and non-financial experts. So you can book in, and they're not selling you anything. So, if you speak to a financial advisor and they're not trying to sell you into a specific product and getting a commission, they're just talking to you about what you're wanting to achieve and giving you no BS, right? There's no conflict. And then what we've noticed is that actually most people with their wealth actually want to speak to someone non-financial. So someone's at the moment's going through a management buyout. Or another example would be when you were thinking about doing that commercial real estate transaction, one of our experts we could have linked you with was someone that's heavy in the commercial real estate space. Right. So you could, for your $1,200 a year, have 3 or 4 meetings with them over the year, and that wouldn't cost you anything.
Wow.
And we make it unlimited because we believe that busy people that are ambitious don't have time to abuse the system.
Yeah, true.
Like, you're not going to want to meet with us every week.
Yeah.
And if you're using it every week, you probably love it. So even though you'd be costing us money, we think that you might be telling other people about us.
Yeah, exactly.
So that's kind of
the word of mouth from just keeping it open. Yeah. Similar to us with like client support and hosting, like not every client's going to use it. It kind of evens out through the range of them. Some people will abuse it, but then there's some people that don't touch it at all. It doesn't roll over.
Exactly. A bit like a gym.
Yeah, exactly.
A bit like a gym in that respect. Exactly. But I mean, we just wanted to focus on like, hey, give lots of value, and we were selfishly making this business model, even though it disrupts the industry. We were actually doing it because I also noticed when we were building out the business and the group, I was like, what are the biggest issues that financial institutions have? And often it's about assets leaving their business very quickly. Yeah. And if that happens, they can go out of business almost overnight. You look at a bank run that ruins a business. You look at a asset manager that loses all their assets under management instantly. And it might not be because they're doing a bad job. It might be because the market has shifted and the assets are naturally pouring somewhere else. So with this business model, we can go, you can have all your money in a term deposit or go off somewhere else and put all your, money into a commercial real estate deal. We're just there providing you value. And what we do as well, like Costco, is because we're providing you value through the membership, we can dramatically lower the cost of transacting and actually subsidize it. To give you a better experience so that you stay with us longer. And that's the kind of thing. That's the thing.
Makes sense.
It's always good to look at how you can disrupt the business model, but keep still maintain a healthy margin.
No, that makes sense. Yeah, love it.
Yeah, so we're pretty happy about that.
So what were you using before Go High Level? Just quickly.
Nothing.
Okay.
So we were making the decision on what do we do, where do we go? Yeah. And we weren't using anything, and so it's a part of that. But we were looking at everything like HubSpot. We had Typeform. We had HelloSign. We had all these things. The Calendly, Typeform, HelloSign. Yeah. Those 3 alone are like all the same price of Go High Level. Yeah. And then HubSpot on top of that.
It's bloody good value for money, eh? Now that you mention it, I might even look into it. We've just integrated Excello, which is like an all-in-one kind of agency system that's going to really help streamline, because it links to Xero. Yeah. It pretty much does everything we need it to do. But with that up and running now, I'm probably going to look at
have a little
because I mean all the AI and what I really liked about it as well for some clients that were using it was the chat, like your Instagram, your Messenger. Yeah. We had a few clients that were like, because we turned it off, they're like, no, I use it for just like messaging through the whole system rather than having to log in and out of different platforms. That stuff saves business owners time,
Yeah, and we're also using it from a compliance perspective.
Yeah.
Because of our, AML, KYC obligations, we actually are like, well, this could be an amazing compliance tool. So yeah, it's really interesting, right? It's like a lot, like we were actually doing a meeting with a really well-known founder who's scaled up their business really quickly out here the other day, and he was saying, well, in a way, you're forecasting. People would argue that you're not spending enough because we're basically trying to be really profitable.
Yeah.
And I guess it depends what you want out of it. Like it depends if you want to sell it for the maximum amount of price in a short period of time, or you want to build something maybe intergenerational.
Yeah.
Sure. And I think there's that around like owning businesses and
you have to have something else to do next, right? I mean, you can't just build a business and sell it and it's your baby and then flick it and then not having an action plan. Like I think most entrepreneurs and most business owners are go-getters and want, obviously there's so much opportunity out there, what you can move into off the back of most businesses. But it's like, if you don't have that planned out, then it's like you don't want to be sitting there twiddling your thumbs, and you can just keep building, keep adding value. And at the right time, make that switch when I guess you've got a plan moving forward.
I think, when you bring on investors, you need to have a plan on how they're going to get paid back.
Yeah, true.
Like how they're going to make a good return.
Yeah.
So it's that kind of battle between building a enduring business versus really setting it up for exit. Really, like in a decent time frame. So
I've never had that experience. I own 100% of the company, and I've never brought on any investors. I was close, just to see what I could get.
I don't think you need to.
Yeah.
Right. Like with what you've built, and I think that's a really interesting dynamic that I've learned. So this is my second business. So I built a gaming platform and grew it to 450,000 users in like 18 months.
Wow.
And it was very popular. And
what was it called?
Uproar.
Oh, yep. Okay. Yep.
And it did really well, like especially from a user acquisition perspective, and we had some good growth. But my whole ambition behind it was, I'm going to sell it.
Yep.
So, and that actually influences a lot of your decisions. And then with this, when we started it, we've actually created a holding company, and then Acuity is a subsidiary of the holding company, and then we also have a stake in other startups and other businesses, and we will spin out other businesses over time. So we kind of have thought of this now of like, I guess there's the Silicon Valley way of thinking about things, and then there's like the Buffett way.
Yeah.
Right? And like, I think there's a hybrid approach that you can take where you have very strong cash flow, and that cash flow basically feeds long-term investments and assets that can be sold.
Yeah.
And that's why we structured the company in such a way. And it becomes a huge mission because you go, well, actually, there's no reason why we couldn't take this thing public and be a multi-billion-dollar company in the next kind of 7 years. But that is a longer time frame than grow really, really, really quickly, spend as much as you can, and then sell for 120 million or 150 million in 3 years. I think
How much did you sell your first business out of interest?
It wasn't a great transaction. It was 6 to 7 figure transaction total over time.
Yeah.
And
but your first business, that's pretty good.
Yeah, I mean, but I wanted to sell it to Amazon for 300 million. And actually we were the 8th largest gaming platform in the world at the time, and if we had held out and kind of got more investment, the exit potential would have been in the kind of 50 to 100 and something million, because of the kind of online bubble from COVID, and gaming was doing really well through that phase, and we left like 2019.
Oh shit.
So
well, I've got a friend that works at VGW, the gaming in Australia. I think it's worth 4 or 5 bill now.
Yeah.
After COVID, it just boomed, because everyone was sitting at home, and obviously gambling, and not the most ethical of businesses, but yeah.
But yeah,
one of Australia's richest men now, and he just ate shit for 12 years, had all these failed businesses, and then this one popped, and COVID just took him to the next level, and it's
But the industry itself was not sustainable.
Yeah,
it was an industry of like, we had raised 1/20th of everyone else in like the top 20 companies in the industry. So we were 8th, and we'd raised 1/20th at minimum. Some had raised like over 100 times what we'd raised. So we were like, It was David and Goliath big time.
Yeah.
And the industry was inherently unsustainable because everyone was basically losing money. So yes, we could have held on and got an exit, but was like, it's good for the investor that exited, but was it a good business?
Where is it at now?
It's just IP that the company that acquired it uses for, it's probably dead IP at this point, to be honest.
Yeah.
Which is a shame because, again, like I was looking at someone that came in, invested in our company in Medition recently, and they actually are running basically the same company as what we built years ago, but on the blockchain, and they've just raised 33 million USD.
Yeah.
And it's fundamentally the same thing. So it goes to show that like staying in the game is everything.
Yeah.
And I think that when you get forced out the game, it's when you lose control. And that's been a big focus of us, how we structured everything this time.
Yeah.
First time founders, they get taken advantage of a bit, or not even taken advantage of. It's a fair negotiation, right? Someone puts a term in there and you have the ability to say no. But when you're first time round, you can make more negotiation errors that just lose leverage.
Yeah.
And then that leverage might have a cascading effect.
True. You don't know what you don't know, right? Especially when you're starting out.
Yeah.
Obviously, they probably learned a lot from that first transactional.
Oh, totally. Even going through the DD just to raise the capital and then sell the business or sell the IP.
And you're excited, right? Because it was your first time. You're like, yes, you've got this kind of balloon at the end of it or carrot dangling that's like,
totally. I mean, it was
kind of make decisions probably a lot more on emotion than you would your second or third time round, I guess.
Yeah, and like patience. It's another thing. If you look at like large companies, that took on a lot of money in the boom, scaled up really quickly, and then the dynamics of the market changed, and they've got basically the Titanic trying to turn the Titanic around and turn your cost basis off when you're, a startup with 100 employees all of a sudden, and you're spending loads on ads. Like, it's really hard to actually turn that off.
Yeah.
So I kind of now have taken an approach of how do I treat this like a multi-generational business? I think if you do that, the fundamentals are better, and then someone's going to pay more anyway.
Yeah.
And
so you're thinking long-term more with it now?
For sure, that's now. And a big focus on like good unit economics.
Yeah.
Which I think like businesses like yours have a great opportunity to have.
Yeah.
You don't get much resell opportunity, but cash flow is happiness, and cash flow can give you a lot of leverage.
Yeah.
It's like the downside to property, right? Is that most property investments are cash flow negative.
Yeah.
Long term,
it's only when you sell it. And when you sell, you've got to sell it, right? I mean, it's there, but
I know. I mean, I'm looking at it, and I've been looking at it not as an investment, but I'm kind of more of a no debt kind of like asset only kind of approach with my wealth. But the dynamics are getting closer where rents are higher and rates have been coming lower. So you're getting closer to that equilibrium. But I redid the maths again yesterday, and it's still hard. Because if you actually look at what you spend on interest and cost, like maintenance and rates and stuff, and if you actually attributed that, like, and took that against your eventual sale price, like, would you actually make money? Like, so it's kind of one of those things, but I think it's a diversified approach.
Yeah.
So, you've got your business, you might have some property, and then like, how do you have like a good, relatively, you don't want 1,000 buckets that you got to manage, but you might want 4 buckets that like are quite concentrated, well thought out. You're managing them, and then you're building your wealth incrementally over time, and that each bucket has a job. Like the web guy business, it is a cash flow machine, right? And then you got your commercial real estate deal, or you'd probably amalgamate all your property holdings and say, okay, what's the job of this? And then you might have some equity holdings, or you might invest in other small businesses, and there's
crypto and things like that.
And it's a long-term game, but it's got to be strategic. And I think for us, like the access to our experts, that was our thinking behind how a lot of the times you need to just think, and you need just someone that doesn't really win if you do the transaction or don't, to just have a chat with. Because and often your big wealth decisions have probably not been to do with a financial product. It's probably been, do I hire this next person, or what's the right price for, this?
Yeah, for sure.
So that's kind of the
and it's taking risk, right? I think like, how the commercial property came about was I was looking at rentals and he was like, why don't you look to buy? And
that's
I
it.
didn't know what I didn't know. And he's like, well, to owner operate, it's only 20%, not 40 in commercial space. And, if I didn't go to that initial meeting which I thought was to rent or to lease, I wouldn't have known that information.
Well, totally. Like,
people don't ask, I find like people want to find out the hard way, and rather than just asking or having that meeting with a mortgage broker and actually sitting down and going, they'll put the plan in place what you need to work backwards.
That's right.
Almost from what they're telling you need. So you're going to need an extra 50K, or you're going to need an extra this and that. It's like, well, why not let the bank or the mortgage broker do all the work and work backwards from it? At least you know what you need to go and do over the next 2 to 5 years or whatever it might be, But I think most people don't ask. They just kind of sit on the sidelines.
You should always ask.
In life.
You should always ask. You don't ask, don't get.
Yeah, exactly.
You got to always ask.
Got to be cheeky, politely cheeky, I would put it. Ask, but not be, pissing anyone off at the same time.
Yeah, well, I think that like in the example of like something it's that equation behind what are you going to pay for rent versus what are you going to pay on the debt that you have to be there.
Yeah.
And does it make sense? Is it close enough where you're like, I'm happy with that?
Yeah.
Because you get certainty from owning that space.
Yeah.
You don't have certainty if you're renting it.
Yeah.
Like a big benefit to property is actually just that certainty, especially when you're living in it.
Yeah.
That, okay, well, I'm going to be living here. No one's going to tell me randomly I'm going to move out.
Yeah.
So you get certainty, so that's great. But it's all about it. Yeah, it's all about designing. Like it was there. Do you feel like there was a period where you were a bit more random, and then as time goes on, you're like now I want to be a bit more thought out?
Oh, for sure. Yeah, there was definitely a time where it was just a joke.
Right.
Like when I say a joke, like 22, didn't even really know. Like when you're 22, you're like, can I start a business? And is that expensive? And when I learned, you just pay $100, you register a limited company and you start selling, and you just pay this tax man, whatever the percentage was at the time.
If you make money.
Yeah, it's quite an open book. And I think those are the light bulb moments of like, oh, okay, like there's not this, I don't know what I thought at the time, but I definitely was naive to the fact that it was that simple, and I think a lot of people think running a business or starting a business is this complicated, or you need an accountant. You really don't in the beginning. You just need to have more money in versus less going out. And that's really what makes a good business. And taking strategic risk, I would say, like hiring the first hire and putting them on the salary. That's probably
that's one of the biggest risks.
That's one of the biggest risks, because you can't really get rid of them that easy. There's 90-day trials and things like that. But once that 90 days is up, you're pretty much locked in with the person. Yeah. And I think, but that's probably why my first hire was also another salesperson, because we were still outsourcing it.
That's so smart.
And we go, well, we sell a website for XYZ. We get it built for half that. We've made some money, and just kind of
sales cures all.
Yeah. My first goal was just get to 100 hosted clients. And then after about 6 months, maybe a year, had 100. I used to have this whiteboard that I'd put all their names on. Soon fill up the whiteboard and needed to go into an Excel spreadsheet. And then was like, okay, could probably go to 200 and then 300. Then, starting to hire people, I think was quite naive. I met a guy, you might know, Sam Ovens, who started school.com. He had a bunch of businesses. He also had consulting.com, which I think he sold. He was Forbes under 30, and working with him in a shared space after maybe the second or third year, he was like, cool, websites is great, but what about the digital marketing side? And that's really with the light bulb moment where I went, yes, rather than going to war every day and selling one-off sites and build them and then get paid, we were getting the retainer model where we was running their ads or optimizing their SEO. And I probably got lucky with hiring this guy in India, which was actually really good at SEO. Like, as running a web company, you get hit every day with we can do better, and this is wrong, and I'm an SEO expert and blah blah blah, and you're like delete, spam, delete. But something stood up about this one guy and gave him a shot, and he was probably ranked us top of Google after like maybe a year or two for Website Design Auckland, which was still in its early stages. There's so many website design companies now. There's probably 2,000 registered alone, but back then it was probably a lot smaller. And that was kind of another light bulb moment where we're like, okay, we can rank for this, but it's a couple of keywords. Let's try and rank for more. And then off the back of that, started delivering that to clients, and then off the back of that, I started hiring in-house specialists. Yeah.
Are you moving into like content creation now?
Yeah. We've got a couple of content creators, visual and written. Yeah. It's
the next wave.
Yeah, well, it's the next wave, but I mean, where we
here?
moved into that was just getting rubbish content from clients, even big businesses that were like, "Here's our assets," and it's like, wow, couldn't really put that on the website. So
Right.
I guess from a content piece as well, it's really our content writers would, follow best SEO practices around what's optimized, following proper technical structure on the page, as well as writing good content. I think that's really where the biggest value add is. Like, you can give us your content, but we're going to have to optimize it anyway if that's the goal to rank. So rather than kind of going back and forward, it's like we'll just put a line item to deliver that piece of work and do it well with proper structure around SEO and move forward. And you can just focus on the parts of your business which you want to focus on.
Awesome. Yeah, that makes sense. Hey, so what does success look like for you over the next 5 years then?
Success probably looks like moving into a lot more of AI products and building them internally. So using the already good business we have to kind of start building out some of those other value adds, which can
to get more recurring revenue, like basically upsell and like, okay, now we've got this to serve your needs for optimizing your sales or maybe optimizing support.
Or optimizing your website or better conversion rate optimization on the website.
Right.
So, one of the tools I think we mentioned at the start of the pod is like an AI calling, but mainly for inbound. We met with one of our skip-in clients, and for example, they finish on Saturday at 12, and Sunday they don't answer the phones. So this would be able to answer the phone, kind of have a bit of a conversation with the client that's an AI generated, sounds exactly like a human, although we are telling them it's an AI because you don't want to confuse people. But this guy, for example, the other weekend, just met with him last week. He said the other weekend he had a lady calling like over and over and over, and he was like, this would be a perfect product because it would be able to explain to her, pick up the phone in the first dial, explain to her that we don't work Saturdays, but I'll take all your details and someone will be in touch on Monday. And that would have stopped her wasting half an hour, 40 minutes of her weekend calling, where's my skip bin going to be delivered? It could have probably even answered the question, probably next week sometime. But, helping people from a user perspective, also helping the clients, I think is going to be
you'll know from being like sales focused that, sales is like sales processes and making the pipeline great and a great experience is everything.
And answering the phone call right away. I think that's where I've strived in sales, is getting to the client straight away within the hour, getting a proposal out to them pretty quickly, as long as we have all the information given to us. And that is really where you want a lot of sales, is just being on. Because if you're on, I've got clients that will inquire and right away I'm clicking their number and ringing, and they always go far out. That was fast.
That's us as well.
And that's what is the difference, because if my service in terms of sales is going to be that on, then the delivery of everything else we're doing in their mind is going to be also on. So
it's a trust thing.
It's a trust thing, And it's also, we're taking it super seriously around some of our competitors don't reply to clients. They've said in like 2 to 3 days. It's like, what's the point of being in business if you're not going to pick up the phone and new customers?
We call immediately, once someone registers. So they're doing the hard bit, which is getting their account set up. And we are already on the phone to them. And people love it. They know you're human. They know you exist. They, they get that extra bit of trust, and also you get to help them if they get blocked. I know it's a different cycle, because you guys are kind of trying to sell them quite a large ticket item or medium ticket item if it's on the retainer stuff. Whereas for us at that stage, we're just kind of trying to get them like some value.
And they might turn into a bigger, higher paying customer if you do that anyway, right?
Totally. But just helping them out.
Provide, and the more you help them, then probably the later down the track they're going to say, well, these guys.
Well, it's a long game. And with finance as well, it's a very long game. So it's cool. It's a good space to be in, but I think the sales space, like, there's huge opportunity. Like automating and improving how people can actually serve their customers in that, especially in that sales and support phase. So much opportunity, and that's something that business owners should because if you get, let's say, 3 calls a weekend. Well, let's say your conversion rate is 20%, then you're losing a sale every 2 weekends. And the incremental cost of having that always on, helps you as well. It also helps you in busy times if you can't get to the phone in the week.
If you ring and get an answering machine, that's dead. But if an AI picks up the call, handles it, and says a real person is going to call you back, that's the value you're looking for, because at least I'm answered. And obviously you have to follow up with the call right away as well.
Yeah, you have to be
but, nothing is missed at that stage. Like an answering machine's pretty old school in today's age. It's quite, even like push 1 for Sue, push 3 for Steve.
I don't like that.
It's like,
there's some really great AI services out there and LLMs that you guys can build on that will be able to provide this quite nicely. So I think the kind of question I have is like, if sales is so important, but maybe, and a lot of times business owners, you're kind of the exception in a way, because a lot of business owners are not the salespeople. But you had the strong sales bent, which really gave you an edge. What are some hacks, or what are something that, a few things that someone, let's say they're actually not sales focused, but they're starting a business, what are some hacks you could give them, because you came at it straight away from a sales perspective?
I would say find a salesperson, because without sales you haven't got a business, right? So I would say if you were more introverted and you're a developer and you're starting a great product, you're going to need to sell it. I think a lot of great minds will work on the product and try to get it perfect. I would say either you figure out how to sell, which is just talking to people and getting out there and being pretty bold, or find somebody and partner with them, or pay them and take the risk, paying them without giving away shares or equity in your great product that you've built, and get them involved, whether it's profit shares or a way for them to dig their toes in the sand. Because most sales guys, in my experience, will bugger off for more money. Most of them are money driven. Most of them like to go out and party, and that's probably the hardest people in my business to manage, because they are they're extroverted, right? So they're out there, and they like to go out to the bar and have a drink and meet people. But you can definitely find people that are introverted salesmen as well. And I would say that's probably the biggest thing if you're starting a business, is make sure you're breaking stuff and you're getting sales. You're not going to keep everyone happy. I think that's the biggest gold nugget would be, you're not going to make everyone happy, especially in the beginning. So you look at some of the biggest businesses built around the world. Of course, the first probably 2 to 3, 4 years, they were eating shit, pissing people off. Maybe the product wasn't there yet, but they've popped out the other side. I like to call it the Shawshank Redemption. You're crawling through a pile of shit, and then you pop out into the lake, and you're free almost, because you've stuck at it. And he could have turned around and gone, "Oh man, I'm crawling through a pile of crap here. I'm going to go back and be in a clean cell, or I'm going to keep pushing through and pop out through the lake and be clean on the other side." I feel like a lot of business owners and people starting will stop halfway and be like, "Look, I've pissed this person off. I'm not getting any traction." I think I was lucky. I had an accountant that was a family friend, and her son started a web company, and she would say, "I shouldn't really show you this, but you're actually doing better than him in his first early stages." And now he's running a pretty successful business in Hamilton. They're looking after some of the big boys like Air New Zealand and the likes of that. So I would say, it was just people like that where I was actually thinking of quitting. But gave me that edge to say, keep going, keep pushing. A little piece.
And it changes from day to day. I think business ownership, you can feel on top of the world one moment, and then next moment it's like, well, that's intense.
I saw a meme yesterday. It's like the craziness of being an entrepreneur is like you could have $3 in your pocket one minute and then 200K the next. It does fluctuate. Obviously, we're at a stage now where it's not so much, but early stages definitely that. You're thinking, how the hell am I going to pay bills? And the next minute someone calls, or you call someone and like, "Yeah, I want to go ahead," and it's like, okay, what was I worried about? So it's definitely that. But I would say pushing through. But if you've got the cash flow there to support, you just keep going, right? It's really when you run out of cash.
I think that was that piece that I was talking about, the Titanic. A lot of businesses kind of fall over where basically it feels too hard to solve the problem. You have an unsolvable problem. For example, you have all these obligations, And that goes for like any type of business, right? Where the more obligations you have, the harder it is to unwind.
Yeah.
So I think staying lean and being nimble is like just everything, and trying to put yourself in a position where you can't die.
Yeah.
And that's where a lot of venture companies fail,
Yeah.
because they rely on venture money. And if venture money turns off, they don't have a solution to keep going.
Yeah, true.
Like, and a lot of founders that are in the venture space, they don't have their asset backing behind them, at least if they're on the first time. Because if you're a second time founder and you've got a bit of resource, you know, someone turns off the tap, well, you might be able to turn your own tap on.
Yeah, exactly.
And go, well, fine, I can ride this out myself, and maybe I'd prefer that anyway.
But it's also a lot of it's mindset, right? So when you've got venture capitalists and investing into the business, it's also that pressure of like, you're not really doing it for yourself, you're doing it for somebody else, and you're more or less an employee at that point, because you still have to be held up to the person investing. Not so much, I would say. You still have your freedom. They let you do what you want, but it's still that mindset. I think, you know, a lot of times I've thought of getting an investor, but then I'd be, you know, accountable to somebody. And I think for me, I think everyone's different, but for me, that would kill me and kill the creativeness of having my own 100% of, like, founded it and it's my baby. Yes, it probably could be a lot bigger and getting investment, XYZ, you know, it definitely could be, but it's like, I also feel like it would kill for me that creative flow that, you know, I'm in complete control. Even if it was a small investor, it would still have to be indebted to them, or more or less.
Yeah, I mean,
so that
you have an obligation to try and, like, as a director, you're trying to provide the shareholders with the maximum amount of value possible. And you know, I think it's interesting. I think, like, who you're partnered with and how they treat you can play into that, right? Because the more you get diluted, and depending on how the other stakeholders are, like how you feel treated, or basically the upside that you think you can eventually get, can impact your momentum, your confidence, your kind of work ethic potentially. But if you get the right partners,
it's about
that, my gosh, it's you've got all these people that are standing behind you saying, go get it, and also if you need anything, just give me a call.
True.
So, like,
you're 100% right. I mean,
it's a balance, and it's hard, but you know, it actually drives me personally probably more because it's someone else that, like, will lose if I lose.
True.
But again, it's all context and how you feel about that relationship.
True.
It's more likely because I feel good about that relationship and I feel good about those people. I'm like, okay, I'm going to do everything I can to make sure that everyone that's backed me is going to, like, get a return.
For sure.
And that could change. That could change overnight.
Pressure creates diamonds. But I think you're right around having the right partner. You could have someone just throwing money at you and adding no other value. It's
and
literally
saying,
just from a cash perspective.
Spend it.
You
know, like, if the partners are saying, hey, like, we've given you $2 million, I want you to spend it because I want you to get to a certain milestone by a certain point, you might make more mistakes.
True.
So again, that's about the partner you choose and what race you want to race. Like, we're actually just all running our own race. Like, it doesn't matter if you're not venture backed and I am venture backed, or the other way around. Like, we're running different races. Like, we shouldn't compare each other to each other. And it's the same with, like, someone that may be a trust fund kid and they turn that $10 million that they got given into $1 billion. That's actually a really great achievement. But someone could come from leaving school early, doing a bunch of laboring jobs, etc. That was my background too, essentially. And then founding a business, maybe that is a moderate success or not a success, and then you know, we're different, right? That's a different race.
But I've also seen the other side where, like, a friend of mine runs a software company, and the pressures that come with that. You know, having investors.
And nuts.
But then there's also the pressures of, you know, running your own business with no investors, going, how are we going to pay bills on Monday? Or, you know what I mean? So there's also that pressure as well. I mean, you choose your pressure, right?
And then,
I mean, you're right about the partners. Having the right partners is crucial, because, you know, the partners that are going to provide value and have the backing and the experience rather than just the money is so important.
Well, and who are you taking? Like, are you taking on someone that actually doesn't know what you're doing? Like, and just assumes it's easy? That can be difficult, because, like, if you're trying to disrupt, like, you know, a large industry that actually, and you're changing the business model, Like there's so many variables and uncertainty in that. There's a great book that I always tell everyone to read, which is Thinking in Bets by Annie Duke. She was a professional poker player, and then she now consults to VCs and private equity funds and hedge funds.
What's it called? Thinking of bets.
Thinking in Bets.
Thinking in bets.
So Thinking in Bets is all about making a decision with the information you have at the time, but disassociating the outcome from whether that choice was a good choice. Because you can make a really well-informed decision, but the outcome might not be what you desire, but you don't necessarily control the outcome.
Yeah, true.
So like I can have a flush in poker, but if someone's got a full house, then even though I have a really strong hand, I might bet into that and put a lot of risk on. So I don't know that person necessarily has a full house, and I can lose on that. So that's like that whole approach of, well, I thought it was the right decision to expand into this region. Turns out, the government changed the rules, and all of a sudden we needed to be regulated, and our business was no longer viable. Like, am I connecting my happiness and my identity to an outcome or the decisions that I make? And that was a big turning point for me, because I was like, rather than analyzing, did I get the outcome I wanted? You more want to analyze, how was my decision making?
Makes sense.
Yeah. So I think that's quite good for, it's a you should totally do it. Like, it's such a great book. She's great.
Great. What was her name again?
Annie Duke.
Annie Duke.
Thinking in Bets.
Thinking in Bets. Okay, I'll remember that.
I think it's good because
it's recorded anyway, so we'll
it's all a probability game, right?
Yeah.
So
it is. Life is. Even personally, who you choose as your partner, where you put your energy, it's all a gamble, really. You just got to choose wisely.
And being okay with the outcomes, as long as as long as I put in the work and I work really hard and I try real hard, like, the outcome doesn't matter so much as long as I know that I've given it my all and I've done I've made the best choices I could.
I think that's a good point, is like most people that are depressed or down or out are really knowing that they should be doing something more than they should be. And I feel like that's where a lot of that self-doubt and depression and feeling low comes from, because in your heart you shouldn't be eating that food or be doing that or going to the gym, and you're not doing it. And then you just kind of snowball effects to the point where every morning you wake up and you haven't got on that bike again, and it's just like, you're beating yourself up. And I feel like, especially for me, like the times where things are going great, it's usually everything else is going great and you're doing what you should be doing.
Yeah. But also sometimes you can be like fearful of a future that hasn't happened yet.
Yeah, true.
And you're like trapped in this, in basically worrying about the outcome rather than thinking about what the decisions I can make to affect the outcome.
Yeah, true.
Like, that's like where
I get... got to be numb. So to a certain extent, like
kind of numb to the outcome. You can feel it, right? It's okay to feel it and feel the pressure, because I think that's good. But I think you have to be okay that the outcome might not be what you think it's going to be. Like, it's that whole piece of like playing, like backgammon's I love like probability based games that have skill but also have an element of probability, because that's life.
True.
So backgammon's great. You're rolling a dice, so it isn't like chess where there is an optimum move. Probabilities play into effect. So you can lose on backgammon, but it doesn't necessarily mean you played poorly.
Yeah, true.
And that's a little bit like a lot of things in life.
I agree.
So that's awesome. So thanks for coming on the pod. I've really enjoyed it.
Really appreciate it. Yeah,
it's been fun. Look to have you on again.
Yeah, sounds good.
Awesome, man.
Appreciate it.